Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is Wednesday. It's August 31st. It's the last day of August. Kiddies are going back to school. People are going back to work. We've got a long weekend ahead of us, and then the summer is over. And it's over, Johnny. Remember that? It's over, Johnny. Anyway, the market's up about 84 points on the NASDAQ, about 43 points on the Dow. Very, very random action. Market's going to open up in about an hour. And let's see here, an hour and 18 minutes to be specific with you. Now, yesterday we had the JOLTS report. This is the job openings report, and I'll talk about it in a minute. But this is an interesting, very, very, very interesting number because it looks like the numbers increasing and not decreasing. And as you can see here, job openings have been falling, but at 10.698 in June have remained historically high, and now they're at 11.239. So we got a lot of job openings. That was a major report yesterday that came out. And today we've got the ADP, the private employment report. This report has been on the fritz for the last few months, but they're coming back, and after taking a 2-month pause to rework its methodology, they're back once again. But as you could see here, this is a reflection of what to expect on Friday. But look at how they're all over the place. 175 to 375, that's a consensus. 1 to 2, I mean, that's quite a bit. So it'll be very, very interesting to see this report coming out today at about 2 minutes. It'll come out in about 2 minutes. We may be able to get a little sneak peek of it. But that's coming out today. Then you've got jobless claims tomorrow, ISM manufacturing, and then factory orders and employment situation. So let's talk a little bit about global economy. Chinese stocks declined Wednesday after a strong jobs report. That's the JOLTS report I'm talking about right now. U.S. government data on Tuesday showed that there were 2 jobs for every unemployed person in July. The number didn't go down, it went up, giving ammunition for the Federal Reserve, who argued that economy can tolerate more rate hikes to tame inflation that's at a multi-decade high. Some investors had hoped that the Fed would back off. I honestly, I'd like to do a survey on who thought that the Fed was going to back off in one of the worst economies in 50 years. I mean, I know the market really reacted negatively when the Fed said they weren't going to, change their course. But I mean, who thought they would? Honestly, who thought the Fed was going to slow things down? If anything, most of the people I talk to think the Fed's going to go to 1% hikes from 3/4. So I'm still very puzzled at who the people who thought that things were like things were just coming back to normal already. That was kind of odd. Investors worried that the hikes by the Fed and central bank in Europe and Asia, finally Europe, to cool inflation might derail global economic growth. I'm not going to predict the future until I get reappointed, said on Friday it'll stick to rate hikes. Exactly. The Fed has rates 4 times this year, twice by 0.75, and that's what they're going to expect, and that's what's priced into the bond market. And the bond market, if you look at the bond market over time, it seems to be assimilating it pretty well. Here, let me show you. And it's still choppy. It's still within this channel. I'll be very nervous if it breaks, but it's still within that channel. U.S. government reported Tuesday that there were 11.2 million job openings on the last day of July. That was up from 11 million in June. June's figures were revised higher. And that's this report, the JOLTS report that we just saw a minute ago or a few minutes ago right here. We were expecting 10.4 and we got 11.2. Now, today, we've got the ADP number. Let's see if the ADP number is baked in already. Not yet. We'll check back in a minute. Now, I want you to see something. Put the call ratio is at 120. Look at that, 120. That's grossly oversold. As a matter of fact, if you look at this territory right here, you will see that we hardly ever, here, let me just draw this line again so you guys could see what I'm talking about. We don't go to these levels very often, and when we do, we bounce back. So this is telling me that the market is, in fact, getting a little bit oversold, and there's a really good chance that the market's going to go higher over the next few days. Also, we've seen major pullbacks in growth stocks like Apple, which I'm pretty bullish on. And that looks to be turning around in the next couple of days. We're near the 200-day line. Momentum levels on a short term, let me just pull here, are a little overdone. And that's giving me a good indication that we're a little bit overdone to the downside, and we're going to start going a little bit higher. Now, let's check again. I love checking these reports in real time. It's already 2 minutes past. Let's see if it's there already. Nope, not yet. Wow. All right. Let's continue. Looking at our indexes, or our sectors, excuse me. As you could see, no changes. Energy, utilities, consumer staples. When we look at the charts, you could see here that energy's cooling off just a little bit. I don't think it's too much. I think this is it for utilities. I think they're going to revert higher. Consumer staples are having a sell-off. I think this is what the market needed, but honestly, I think it's a bit overdone. The only sectors where I see this potentially continuing or increasing is consumer discretionary. But even when you look at consumer discretionary, this is that... let me just show you on I can't draw anything on that thing. Here, XLY. When you look at consumer discretionary, and there's an area here that I'm looking at, which is right here, right there. And the question is, are we going to break that area, or is the old resistance going to become the new support? That's very, very important because we're oversold right now. So I'm thinking that we're going to start gaining a little more strength, and the consumer discretionary sector is going to start bouncing around this level versus this level. That would be really good, and that would give the market more strength. And even though we bounced off the 200-day moving average, which was very predictable, I think the market is going to head higher, at least in the short term. So I think we're going to get some relief. Also, as I mentioned to you guys, and I hate to say I told you so, but I told you that a lot of this was going to start looking like this. Well, look at that, 27%, 20. You see there's a lot more pink. It's not all green like it was. Remember, this was 97%. It's now 50%. And this was 23%. It's now 14%. Look at that. Even consumer staples below. Look at that. Over 200-day moving average, 55, but 48. That's telling me that the short term may be a little bit overdone to the short side. Look, real estate, 29%. Healthcare, 27%. Let's see here. Communication services, 35%. Look at that, 12%. So a lot of these look like they've had it, like consumer discretionary, like financial, like real estate, like communication services, and that's telling me we may get a pretty darn good bounce. Let's see if we got our ADP numbers. Let's see if they're in the bag already. No, still no ADP numbers. I guess ADP has not done reworking their methodology. 2 months is not enough time. So let me talk. Today is Wednesday. I want to talk to you guys about stocks that I'm liking. I think I still want to be defensive on the upside, and I think the selling pressure that we just saw is going to fade, and we're going to see some more upside. Now, this is a healthcare company, and healthcare is overdone to the downside right now, like really, really overdone. Look, healthcare. And as I showed you a minute ago, if you look at the graph, look at healthcare. Look at healthcare, 27% and 20%. So the fact that this stock remains so strong is a very, very good sign. Now, I know it's a very expensive stock, and you can get a spread on it and make it cheap because liquidity is pretty good. We recommended this stock back when it was at 324. It went up to 377, and now it backed off to 362. And I think it's going to go higher. Ticker symbol MCK. To the downside, I'm not liking these hotels, and I think these discretionary stocks are going to come back down. I think with the economy right now, with China coming out of COVID, just not seeing that type of upside. So I think this is going to revert back to its base, and this is a good opportunity to short this asset, especially after this upside that we saw in the last in the last month and a half. It just didn't amount to anything, and it couldn't even go hit the 200-day moving average. So the odds are it's going to cool off. Be very, very careful right now. The market's firm. I don't see the ADP data yet. Let's see. Maybe I'm missing something. Let's see. Let's give it a final look. Oh, here we go. Wow, look at that. Ooh, that's a low number. Very interesting. National Unemployment Report represents 400,000 businesses. 175 to 370. They came in at 132. That's a really wacky number. We'll see how it translates. So far, let's see, the stock market's not interpreting it negatively. And again, this is a private report. It's not a public report, but it'll be very, very interesting to see how this reflects on the actual report that's coming out on Friday. Folks, before I let you go, yesterday I went live with Jack Carter to reveal a brand new system, the S3 Advantage. About 3 months ago, we set out to build a brand new trading system, and I think you're really, really, really going to like what we've created. I kept it on the down low, didn't say anything about it. It's algorithmic. It's very, very cool. Jack had an idea. I decided to test it out, and the results were amazing, and we've been on it now for 3 months. Summer's over. Jack's done fishing, and the system is done. You will enjoy this video. I promise you. It's one of the best classes we've done. It's very interactive. It's the first time that Jack and I were sitting next to each other. If you like building systems, trading systems, understanding systems, folks, it's the future. I'm telling you right now, 90% of Wall Street is using algos. You got to get in on it. It's only a matter of time. It's like electric cars. We're all resisting them, but eventually, I hate to say it, but eventually we're all probably going to be driving them. It's like computers and internet. The longer you resist, the longer it persists. Click the link below, watch the session now, and even if you don't learn anything about trading, you'll be an expert on grouper fishing. Oh yeah, just like that. Follow the link below. No jokes. You guys are going to love this. And we give the strategy away for free. No monkey business, no banana in the tailpipes, no shenanigans, just good stuff. Follow the link below. And if you're on YouTube, you could find it in the descriptor. And I haven't seen comments, feedback from you. I want those comments and feedback. Post comments below this video. Have a great day. Send me an email, support@marketgeeks.com if you have a question. Bye, guys.